Chapter 14.2, Writing Off and Collecting Uncollectible Accounts Receivable. So in 14.1, we forecasted how much uncollectible accounts we would receive. 14.2, what happens when it really does happen, when they are written off. Now, a couple things to talk about when you do write off an account. You don't let customers know that you are writing off an account. Rather, this is more of a financial statement transaction than it is anything else. You still always try to collect the money that is owed to you. So let's take a look at this transaction. So on September 5th, we wrote off Jackson's company past due account as uncollectible for $124, memorandum 234. So if you take a look at the accounts receivable ledger that Jackson Company has, you'll notice that they have a $124 balance. Well, guess what? On September 5, we're going to make that balance zero because we're going to just basically take that asset off of our books. Again, we're not going to not try to collect it, but we're going to impact our books. So in order to make that debit balance of 124 a balance of zero, we have to credit it 124. And therefore, we're going to also debit our allowance for uncollectible accounts. So now why are we debiting our allowance for uncollectible accounts and we're actually crediting our accounts receivable? Well, remember in 14.1, our allowance for uncollectible accounts was used for us to forecast. This is the reality of what's happening. So therefore we are taking that out of the forecast. This is the reality, and therefore we are directly reducing the accounts receivable in there. So our transaction would look something like this: September 5. My account title would be my allowance for uncollectible accounts. My doc number would be M234, and my debit would be 124. Now my credit would be accounts receivable / Jackson Company. I would go through and put a slash in a post reference because remember, I'm going to have to post everyone's favorite to accounts receivable and Jackson's Company for that 124 credit. And that's how you record it off. So now let's do a quick little posting review here. And just a reminder, we are going to posting, it's copy and pasting, but we want to post the debit amount to the general ledger. And in this case, we're going to post the allowance for uncollectible accounts into the allowance for uncollectible accounts. I'm going to calculate my balance, post the credit amount to the general ledger. Again, calculating the balance inside of the accounts receivable, post the credit amount to the customer amount. So for this transaction, we will ultimately be posting to 3 different accounts. And then finally, when we do get to the subsidiary account of our accounts receivable, we want to make sure this is the first time that we've done this. In the item, we want to write the word written off. And the reason we want to write the word written off is this gives us a little bit of history in case this person wants to do business with us again. So in this example here, my allowance for uncollectible accounts, I'm going to post this. So you can see that I'm going to presume that you know how to post to the allowance for uncollectible accounts. And I am going to post strictly to the Jackson Company. If you see up here, I've already posted to the accounts receivable, and I'm just going to skip ahead. You do not skip ahead. Complete the process in order, and we go there. But as you can see here, my accounts receivable Jackson Company, I'm going to post. The date is September 5. My post reference is going to be G14. I'm going to write the words written off. That's me leaving myself kind of a note that says, hey, these people didn't pay me. But we wrote them off, so we took it off of our balance sheet in a sense. So I'm going to credit at 124. Their balance is 0. So now what happens if, and then I'll obviously go up. Sorry, jumping ahead. Then I would write my /110 over there. So let's just say down the line, and let's just say, you know what? Jackson comes in and says, hey, we figured out we owed you money, or things got better, or whatever the case is, but they want to pay us. Well, guess what? We now have to basically reverse that previous process, um, and we have to reopen the account to allow them to pay in full. So how do we reopen the account? Well, if we have a 0 balance, we need to make it a 124 debit balance, that accounts receivable. So we're going to debit that accounts receivable Jackson Company. And then remember that allowance for uncollectible accounts, we're going to move that back over into our forecasted amount. And you kind of think of the allowance for uncollectible account, it's not an accurate way, but the credit is kind of the forecast in allowance for uncollectible accounts, and the debit is the reality, if you can kind of think of it that way. Um, Probably not the most accurate, but helps me keep it straight sometimes. So then I have to post this. So now I post this, and basically this is going to act very similar. September 27th, they paid us, accounts receivable Jackson Company. I'm going to put my M251. I'm going to put my slash in the post reference, and my general debit will be 124, basically saying that, yep, these guys owe me money now because I'm reopening. Now, my credit for this transaction will be my allowance for uncollectible accounts, which is 124. And in this transaction, my debits equal my credit. So I've reopened it. So basically, in this transaction right here, I reversed the September 5th transaction. Is all we basically did. So now I have to go and I've reopened them. So now they pay me. The only way I'm going to really reopen it is if they pay me. So now I received cash. So now if I receive cash, that means I have to use my cash receipts journal. So I'll put my date of the 27th. My graphic didn't work too well. I'm going to put my account title, which is Jackson Company, and it's R362 if you look up there. They paid me $124 and I received cash for $124. So now they paid me. So everything is good. So the only time you're really going to reopen an account is if they're going to pay you. I would really discourage you to reopen an account on a person's promise. I would keep it written off until they actually do pay you. In this case, Jackson Company is actually paying. So we get to then go do what everybody's favorite thing is we're going to post. And our posting review again is we're going to post the general journal entry to the general ledger. Again, there's three of them that are going to be happening there. One, two, three, right? We're going to post to the accounts receivable. We're going to post to the accounts receivable subsidiary ledger. And then we're going to post to the allowance for uncollectible accounts. When we do get to the subsidiary ledger, now in the item description, this is coming from when we post from the general journal, we're going to write the word reopen account. Again, that's giving us a note, kind of telling us in the history. Because let's just say 4 or 5 years down the road, we do business with them again. Oh, hey, we had issues before. Do we really want to grant them credit in this example? So we reopen it there. Then what we'll do is we're going to then post the cash receipts journal entry to the customer account. So we're going to take that accounts receivable Metro Food Court, and we're going to post it over there. Now, we're not going to post the cash debit individually to the cash ledger because the cash debit amount is a column total, and that gets posted at the end of the month with the remainder of the cash receipts journal. So if we look specifically at our transaction where we just did here, we're on the 27th, we reopened it. Now again, I fast forward. As you see, it looks like I've already posted to accounts receivable. Do not skip ahead. Don't pass go. Don't collect $200. Do this in order. For sake of demonstration purposes, I am skipping ahead. I'm hoping at this point you understand how to post, and I know it's your favorite, just like it is mine. So we're going to take this 124 for Jackson Company. As you see below, I've got the Jackson Company subsidiary ledger down here. I'm going to post. I'm going to write the word the 27th. I'm going to write the word reopen account. Gives me that description, so I have that history. G14, because it did come from General Journal page 14. I'm going to take that debit of 124, and now I have a balance of 124. And then finally, I'm going to take my 110 and I'm going to put it back up there. So then I'm going to, obviously, before I back up, I would complete this process too for my allowance for uncollectible accounts. But for time's sake, I'm skipping ahead and I'm focusing just on this. But do not skip ahead. Do this process in order. Post to the allowance for uncollectible accounts before you go to the next one. So now I've already posted the allowance for uncollectible accounts, so I'm going to move on. I'm in my cash receipts journal. I am now going to post my accounts receivable credit. So on September 27th, I'm going to, now again, I'm not going to put anything in the item account because I've already given my description, but I'm going to go to CR12, cash receipts, page 12. My graphic didn't show it, but it should say a 12 on the page there. I am going to then take my credit, accounts receivable credit of 124 debit balance with a credit entry. They are different. I'm going to find the difference, which means I'm going to subtract the two, and I'm going to be 0. So As of this point, Jackson Company is in perfect standing with us, excuse me, and then I take my post reference and I put it at 110.